Hey, how y'all doing? So today's review is going to be on EuroCAD. Let's break it down. Let's get into it. So right now we're in my free Discord chat room. If you guys want to join my free Discord chat room, there will be a link to that in the video description. I post my plays every single day that the market is open. I post charts in here, get my analysis, all that good stuff, right? So EuroCAD, here we go. Bias is bullish on EuroCAD. That's what I said. Pulled back into a daily discount. We have a 4-hour high time frame level of support, 1 hour fair value gap confirmation. I'd like to see this clean out low of day first before a long play. 4-hour level of resistance up above in that fair value gap. Okay, so there's a few things that we're going to be talking about because I know some of you might be thinking, okay, he said he wants to see it clean out low of day. Why does he want to see it clean out low of day? What is a discount? What does he mean when he said pull back into a daily discount? Okay, so then you see right here, I said, okay, look closely. You can see we actually have another fair value gap a little bit farther down. All right, yada, 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 yada. So we're going to go to my charts and we're going to break down all of this, okay? By the end of this video, it'll all make sense. You'll know what exactly my mindset coming into the day and how I was looking at this, right? So we're going to start from scratch, as I said, and we're going to look at this from the lens of like, I just sat down at my computer this morning. I've opened up the charts. Like, what's my process like? What made me say this is my play? This is something I like. What made me say that, right? So let's go to the daily chart first. All right, so daily chart, what are we looking at here? What's the daily market structure on this? Daily market structure is bullish. It's operating 100% within a bullish market structure, right? If you don't know what that means, well, I have a series on that on my YouTube, okay? I have an entire series, an entire playlist going over market structure, everything you need to know about market structure in one series. Just go to my playlist, you'll see it, right? So if you watch that series, you know that it's operating 100% within a bullish market structure. Now, I said in chat, pulled back into a daily discount. What do I mean by that? Well, what I mean by that is it pulled back below 50% equilibrium of this price range. So we take our Fibonacci from this low to this high. See what pulled below 50% equilibrium? That's what we want. So we pulled back, price breathed, it came down, it rebalanced all that price action. So it pulled back into a discount. We looking real good on the daily, we sitting real pretty, right? So 4-hour chart, you can see on the 4-hour chart, we have a higher time frame level of support. Now I'm gonna let you find it first. It's a higher time frame level of support. Okay, so take a second and identify it for me. Where is it at? And boom, right here, we got it. See that? Why is this a higher time frame level of support? Well, if you watch my series on support and resistance now, I got a series on that as well. Everything that I talk about in these videos, I've made videos on. Just search my channel for it. Support and resistance series, right? So this is a key level of support. It's a higher time frame level of support. It's always best if we have that higher time frame level of support. So we got an old high inside of a fair value gap. When you have that criteria, many times it's a very sensitive price point. So we have a level of support. And on the 4-hour chart, same deal as the daily. Remember when we had this pullback, look at my cursor, follow my cursor, see this big leg, that is that daily price swing. Now it is displayed on the 4-hour chart. See it pull back within this price range right here, below 50% equilibrium. The same exact thing on the 4-hour chart we want to see play out. It pulled below 50% equilibrium of this 4-hour price range. See this? Take that low to that high, below 50%. Boom. Equilibrium or discount marketplace, right? Discount means cheap. Remember, discount cheap, premium expensive. We pull back into a discount. It's cheap, right? We rebalanced that price action, right? We tested a higher time frame level of support, right? So look at all this stuff we got going for us, all this stuff that's checking off the list for us, right? But what's next? So we've established thus far, we're trading with a higher time frame market structure. We have a higher time frame level of support. We have pulled back into a discount marketplace. What's next? What do we got to do next? We got to get that confirmation on our lower time frame. My main lower time frame charts are the 1 hour and the 15 minute. We had that confirmation on the 1 hour chart. When I say confirmation, what I mean is we want a lower time frame shift in market structure. We want a fair value gap on the lower time frame. And we actually have a couple. We have one right here. That's the more significant one. See this? We're going to note it. There is your fair value gap on the 1 hour chart. And we have another one a little bit farther down because if you remember when I was reading this off for you, Where was it at? If you look closely, you can see we actually have another fair value gap a little bit farther down. So with this play, you would not want to keep your stop below that first fair value gap. This is key. You want to take note on this and pay close attention to this. Better stop out point would be below the lows because that is a draw, right? So here is that little fair value gap. You could see it. You got to kind of strain your eyes a little bit, but you see that right there. See how it's right below that first one, that more significant one? So that's why I said you do not follow my cursor. You do, well, actually, let me draw this on a little bit better first as well. Boom, got it. So I said that's why you do not want to keep your stop below this first fair value gap. Look at my cursor. There is the bottom of that first one. So if you watched my series or you watched my video on the best place to keep a stop, you will know that what I said in that video was the best place to keep a stop. My most popular place that I keep my stop is below the fair value gap low. You would not do that in this case. You would not want to do that right here. Okay, because you have another imbalance right directly below it. See that? So I wanted to allow for price to trade down into that if it wanted to. That is why my stop was right here, below that low, because it allowed for that. It didn't end up hitting it, which is fine, but I still wanted to allow for that just in case. All right. So, all right, let's put in some data dividers and then let's go down to a 15-minute, but that's our confirmation. That's our lower time frame confirmation, lower time frame fair value gap. That's what we want. And it happened off of a higher time frame level because that's what we're doing. We need that reaction. We want to see price respecting its levels. Okay. As I tell you guys, let price tip its hand to you. Let price show its hand. Okay. Let it tell you what it wants to do. Okay. Now I'm going to put in a data divider. Okay. I think it cleans it up a little bit. Lets us identify those liquidity pools a little bit better. Let's go down to a 15-minute as well. All right, so 15-minute chart, right? So I said something else in here. I said, I'd like to see this clean out low of day first. That's what LOD stands for, low of day first, though before a long play. Okay, so you might be thinking, okay, what is the reasoning behind that? Why does Mike want to see this thing clean out low of day first? Like, that might make some of you scratch your head because you see this fair value gap. You see this fair value gap confirmation. You think, okay, that should be enough, right? We've got our confirmation. Why does he want to see it clean out low of day? So did we have a Judas swing this morning? So I want you to follow my cursor. One of the most common times for a Judas swing is right after midnight, New York. Okay, and the purpose of that Judas swing, the Judas swing is a fake run in the opposing direction of where price really intends on going. And that Judas swing, what it does is its sole purpose is to take that previous liquidity, that key liquidity pool. So what was the previous session liquidity before New York? It was Asian session. Okay, this was the low of Asian session. Let me right here, look at my cursor. That's the low of Asian session. And then we had low of previous days lows, which was during New York session, key liquidity pool as well. So this was a key liquidity pool right here. Now, we really didn't have any Judas swing during London or right after New York. There was no Judas swing on this. It like chopped around from the jump. It just chopped around. See this? Chopped around, chopped around, chopped around, chopped around, chopped around. You had this nice move right here, which created your fair value gap confirmation. But after New York, there was really no Judas swing. It was just a bunch of choppy price movement. See, price came down, tested, boom, rejected. Tested, boom, rejected. Tested, boom, rejected. Now, many people, they'll see this and they'll think, okay, this is a clear established level of support. Look at all these rejections. It keeps rejecting, it keeps rejecting. Price is telling me that it wants to hold this as support and move up higher, right? Well, we have to keep in mind that it did not take any key liquidity pool. It did not take Asian session lows. Okay. So that's why I said I want to see it clean out low of day, because remember, wait for liquidity or you'll be the liquidity. We want to see it take out that key liquidity pool. Okay, so we come into New York session. We did have a nice little move off this level. Oh, and also one more thing I forgot to talk about. We'll get back to that in a second. But another thing I want to know is, because I just remembered, we have a 4-hour level of resistance right here as well. See that? That's a 4-hour level of resistance, and that was actually the one thing that made me. That was one thing I did not like about the play. Was this level of resistance. It's still bullish overall, but we had this O low inside of the fair value gap. You guys know that criteria. That means it's a level of resistance. That was the one thing that concerned me. Okay. But yeah, so we got that noted. Now let's go back down to this because I want to cover this because it's a very important point for your notes. So the reason I want to see it take low of day was because that was the key liquidity pool. Okay, we didn't have that Judas swing during London session or right after New York. And we had like a bunch of choppiness in here. So we know a lot, using common sense, a lot of sell stops are going to be resting beneath this level. I understood that. And coming into New York session, so I'll let the news get done. I let all that major news get done with. After that, right after that news was done, we had a move lower. We had this move lower right here. And what do you think it wanted to target? Because think about it. We're in New York session at this point. We are in New York session. Okay. What is previous session liquidity? What's that key previous session liquidity? Because remember, beforehand in London session, it was Asian session. That was that key liquidity pool. It just chopped around. It didn't tag any major liquidity pool. And now we're coming into New York session. Price ramps up right here, takes out these buy stops. It tests a key level of resistance, which is on that 4-hour chart. Where's that next key liquidity pool? London session lows. London session lows is that next key liquidity pool. Okay. These relative equal lows in here that was formed off of that imbalance. Boom, price comes down and cleans them out. That's that key liquidity pool. Wait for liquidity or you'll be the liquidity. We waited for that liquidity. I entered as price traded down and cleaned out those lows down into my 80 institutional price level. Okay, now this is another key point. Okay, there's going to be a lot of nuggets in this video, so make sure you take notes. As I've said before, your major market reversal points, they'll happen off of key institutional price levels more times than not. Your key institutional price levels are 0, 0, 20, 50, 80. Again, 0, 0, 20, 50, 80. Many times when you have a reversal that is not off of a key institutional price level, it's many times not a major market reversal. It is many times a fake out. It is many times just a stop run to grab buy side or sell side, depending on whether you're long or shorting. So in this case, you can see it found its bottom right here. This was the bottom of that during London session. It was at 1.4681. So it didn't quite hit 80. All right, we filled in that fair value gap, sure. And that's why we bounced a little bit right there. But I wasn't convinced that it was a major market reversal point. One, for the reason that I just stated, the fact that it didn't grab any major liquidity pool. And also that it never tested that 80 institutional price level. I was not convinced on this. I figured it was going to run these stops. And that's exactly what happened. It pushed up into that level of resistance, pulled the rug, grabbed those stops, tested your 80 institutional price level now. So now we got everything. Now we're taking the key liquidity pool. We're testing an 80 institutional price level back down into that fair value gap zone. It rebalanced it earlier, but we're still in that zone. And we also have this fair value gap down here as well. Tested that higher time frame level again. I mean, it had everything I wanted on it. Right. So that was why I wanted to see it take out low of day, because that was that key liquidity run. Okay. It took London session liquidity at this point and tested the 80 institutional price level. That was why. Again, this was the one thing that I did not like, the fact that on this push up right here, coming into New York, it tested that 4-hour level of resistance. I would have preferred if it didn't do that, if it just chopped around a little bit and then sweep these lows and then popped them into it. That would have been ideal. So that was the one thing I didn't like, but I want you to think of it like a tug of war match, right? I want you to think of it like a tug of war match. So in a tug of war match, the stronger side is going to win. The side that is exerting more force, they're going to pull the other side and win, right? So think about all the things that we got going for this. Well, we've already concluded that the higher time frame trend is bullish. Market structure is bullish. We have pulled back into a daily discount, which is bullish. We rebalanced that price action on the daily, which is bullish. We pulled back into a 4-hour discount, which is bullish. We have tested a 4-hour higher time frame level support, which is bullish. We have a 1-hour fair value gap confirmation, bullish. We have taken liquidity, a key liquidity pool at this point. We're back down into an institutional price level of 80. I think I already said this, but we sweep that liquidity pool. I mean, look at all this stuff that we got going. Boom, 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 boom. All this stuff going in our favor. But there's one thing. We got a 4-hour level of resistance inside of the fair value gap right here that is just tested. That's 1 minus. So think about all the things that we got going in our favor and then think of the 1 minus. Think of it like a tug of war match. We got all of our pros on one side and then we got our con on another. All right, pros and cons. Which side do you think is going to win? More times than not, the likelihood, because remember, with trading, we're playing probabilities. We're playing the odds. More likely than not, the bulls are going to win. on a play like this. We have one minus this, but in a tug of war match, remember, they're using an analogy of a tug of war match, this side is probably going to overpower it. It's probably going to overpower it. Okay. And also, it was really good risk reward. So there was one thing I didn't like, but we got all this other stuff. Really good risk reward, just shy of 2-1, just barely shy of 2-1 risk reward, which is still really nice. And I mean, yeah, it was a good looking play. So my stop on it, because remember, as I said, let's see, let's find it. If you look closely, you can see we actually have another fair value gap a little bit farther down. So with this play, you would not want to keep your stop below that first fair value gap. Better stop out point would be below the lows because it's a draw. My stop was right down here, okay, because it allowed for it to trade down into that level, okay, into that fair value gap. So my stop was beneath this low. And my PT on it was that 20 level. So this was the draw. We had this liquidity, or this was our key liquidity pool, which is high right here. But I figured, because remember what I just told you guys, major market reversal points happen around 0, 20, 50, 80. So we got a 0, or a 20 level right above this. So what do you think it's probably going to hit? It's going to hit the 20 level. That's exactly what happened. We hit that 20 level. So I built right before the 20 level, actually, just to account for the spread. But yeah, that was my stop out point. That was my PT point. That was the reason for entering. That was the reason for waiting for low of day to get taken out. And yeah, so just a really clean play. And good risk reward again, like I said, just shy of 2-1 on it. But say you wanted to, you might be thinking, okay, but is this a valid PT? Yeah, that's a valid PT. You could hold for previous day's highs if you want to be a little bit more ballsy with it. Again, I played it safe because of this 4-hour level. But that's still a valid PT considering the fact that you are trading with a higher time frame market structure, higher time frame trend. You have all this stuff going for you, and it's really nice risk reward too. Because, like, for example, let's plot a risk reward tool on it. Let's say you got long. All right, let's say right above that 80 level, and let's say you kept your stop right here. Good place to keep a stop. And let's say you're targeting those highs. How much is that? Look at that. That's over 5-1 risk reward. That is over 5-1 risk reward. Okay, think about that. And that's a valid PT. Again, it's a valid PT. You have the higher time frame trend backing you. You have all this stuff going for you. Higher time frame trend, pull back into a discount. Higher time frame level. Boom, 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 boom. You got all this stuff going for you. With a 5-1 risk reward, I mean, heck, you don't got to be right that often to be profitable. I mean, I'm not a math whiz. I suck at math, so I can't tell you. But I think it's like you can be right 30% of the time and be profitable with that. That's 30% of the time that you could be wrong. I mean, you could be right, like probably less than 30% of the time and still be profitable with a 5-1 risk reward. Think about that. And think about all the stuff that you have backing you. The higher time frame trend, higher time frame level, confirmation on the 1-hour chart. You have all this stuff going for you, and it's 5-1 risk reward. You'll get plays like this. I mean, you'll get plays like this consistently because the same stuff repeats, the same patterns repeat. It's the same exact stuff week in, week out. The patterns repeat. The true question is, do you have enough patience? Do you have enough discipline to wait for these setups, to execute on these setups, to be consistent with these setups? Because they're not all going to be winners. We got a winner today, but they're not all going to be winners. Sometimes you're going to have an L. Sometimes it's going to come down and it's just going to crack those lows. That's going to happen. You got to accept it. You got to be okay with it. And again, if you were to wait for plays like this, 5-1, remember, you can have L's. Don't beat yourself up over L's. Don't beat yourself up over losing streaks. Drawdowns are going to happen. They happen to all traders, not just beginners, professionals as well. Okay? That's fine. There's nothing wrong with that at all. Accept it. Be okay with it. You need to think over a long you need to look over a long series of trades. Think about it over a long series of trades. Think about it. Think about over the course of, say, 50 trades. Okay, over the course of 50 trades, you take a setup like this. A setup like this over the course of 50 trades. What do I mean by a setup like this? Well, what I mean by that is higher time frame market structure backing you, higher time frame level, lower time frame confirmation, taking a key liquidity pool during your kill zone, and beautiful risk reward. Like I said, I almost got 2-1 on it, just shy of 2-1, which is a nice risk reward. You can be profitable with a 50% win rate with that. But 5-1, I mean, sheesh. 5 to 1, that's amazing. That's amazing risk reward. And you have all this stuff backing you. If you were to do that over the course of 50 trades, think you don't even got to be right half the time. You don't even got to be right half the time and you'd come out profitable. Guys, you can make a living doing that. Right here, there's a setup. It's a setup. These setups repeat. You can make a living with them. You can get rich with them. You can get all the prop capital in the world with them. But again, the question is, are you patient enough? Are you disciplined enough? Most people aren't. Okay, most people, they just don't got it. They don't got the discipline. They don't got the patience. They got to be trading this. They got to be trading that. They got to be everywhere all at once. They got to be trading a million different things a day because they need that dopamine hit. Most people aren't here to make money. They're here for dopamine hits. They won't admit it. They won't say that to themselves, but their actions say it. Okay? Because if you were to do this, right there in front of you is, as I've given on this YouTube already, it's a working system. It's a working system right there in front of you. You're looking for one, you found it right here. But yeah, just a beautiful setup. So yep, if you guys enjoyed, make sure you leave a like, subscribe to the channel. I'll catch you later.